Thanks for everyone's time today, and look, it's great to be back in Sydney. This is obviously a hometown for me. It's been really nice catching up with a lot of my colleagues used to work with over many years in the capital markets. So thanks for everyone's time. I've got to say it's been a great turnout. Thanks to Jackson and the team from RIU. We've really enjoyed it and had a really good result, really good response to our recent updates. So look, this is an exciting one. Many of you will know QMines now. We've been listed for about 3 years. And just mid last week, we put out our maiden pre-feasibility study. And thank you for the introduction. As we talked about, we are a team that really moves. Okay, we're obviously younger and dynamic. We're big shareholders in the business. I've put a lot of my own capital into this business. We're here to generate value for our shareholders. All right. So as I said, we moved. So we've delivered 6 resource updates, a main reserve statement, and a PFS in under 3 years of being listed. So this really is one to watch. And please come around and see us at the booth. We'll give you a bit more context, but this is certainly an exciting one. All right, so I like to keep things really simple. So as we go through the presentation, you'll see I try and keep things very visual and try not to get too technical. All right, so the strategy is very, very simple. Okay, this is about Queensland, this is about copper, and this is about development. Okay, we know that there's a shortage of copper coming, and we know it's big. Okay, and we think that if we can get this asset into production, or a number of these deposits into production, right at the start of the next cycle, we're going to generate some really strong outsized returns for our shareholders. All right, what we're going to talk about today is our pre-feasibility study, amongst other things, and it's on our Mt Chalmers project there. You can see, in the large package closest to the coast. So it's very well located. We're just out of the regional town of Rockhampton. Okay, it's about 8 hours north of Brisbane. And as you can see, there's a boatload of infrastructure here. So we've got a really low capex advantage that you often don't see in the mining industry. This is not 500 kilometres from the nearest pub or the nearest post office. We're right very close to a large regional town with a lot of mining expertise and a lot of infrastructure. Last year, in August, we bought our second project here called Develin Creek. We've initially purchased 51% of that, and in August this year, 12 months after, we've got the second payment coming up to also acquire that for 100%. So we plan to own both of these assets on a 100% basis, and we think that really gives us a really good structure from within which to generate value. All right, so let's talk about our flagship Mt Chalmers project. As I said, it's one of multiple deposits that are known, okay? This particular asset was the key asset that's brought into the feasibility study, okay, that we've now delivered a maiden reserve statement on, okay? And it's got some scale, it's got some grade, it's shallow, okay? Don't underestimate being shallow. And if you look at the orientation, it's actually flat lying. Okay, so this isn't your typical steep dipping asset that goes underground quite quick and is quite high cost. This will be a low cost, ultra low cost open pit deposit that pays really strong returns early in the mine life and pays back capital really quickly. And the other key hint here is if you look closely at that block model at the top there, you'll see that a lot of the grade is actually at the top. Okay, so this isn't your typical deposit where your grade gets better with depth, but also you've got a lot more material to move. There's a lot of great reasons here, just simple geometry reasons why this makes a lot of money. All right. So as I say, high grade, shallow, open pit deposit, low on the cost curve, and a lot of growth potential here as well. Now, as I said right at the start, we are unashamedly a younger team. This is my third listed business, and our last business we sold, many of you will know, we sold to a large US-based private equity group. We made a lot of money for our shareholders, and we're here to do it again, all right? We like these brownfields assets, and we like to move. We hate watching the grass grow, we like to deliver, okay? So I'll talk through some of these things we've delivered since we've been here. Okay, in terms of resource growth, I challenge you to find a group that really can push it out as quickly as we can, all right? We own our own rigs on site. We've bought all the farms around this mine site. That's really given us an ability to really rapidly develop this asset without all these complicated issues with dealing with landowners and trying to source rigs and waiting for all the downtime that's involved. So we move, all right? And this is our track record, okay? Since we listed, when we listed, we had 0 tonnes of copper in resource. We've now delivered 6 resource updates. And believe me, watch this space. It is not going to stop. This is going to keep going the right way. Now, in terms of the pre-feasibility study, many of you who have come through the booth have been wanting to know a bit more about this. Obviously, it's a big update for our business, okay? And I'll talk to the valuation side of it shortly. But we've delivered here a PFS just on our Mt Chalmers project. As I said, we've got 3 other assets or 3 other deposits that don't fall into this PFS, so it will continue to grow, okay? If you look closely at the slides here, you'll see we've optimised this within an inch of its life, okay? We're getting the best grades really early in the mine plan. That's great because it means it pays back capital really quick, it returns value to shareholders really quick. We're getting the highest amount of copper equivalent production really early in the mine plan as well, and so the same thing there. But what a lot of people don't understand is that these open pit, shallow deposits where there's very low strip ratio, good mets, good grade, just generate really strong returns, okay? And down there you can see our cash cost versus the spot price today. We've got an average cash cost of about $2.12 US dollars per pound over the life of this mine, okay? So this is a long life mine, 10.4 years. It's a low cost mine. We've got a capex there of about $192 million, which we think is infinitely fundable, and we've got really strong returns, okay? So this will pay back a lot of value to our shareholders really early in the mining cycle. The other point there is that we are, and as you'll see shortly, we are doing things differently, okay? We knew that, the big risk here is the permitting and approvals process, okay? We've had a lot of dialogue with the local regulator, and as you can see, a big part of our business plan has been about showing the regulator that we can develop this asset sustainably, okay? So we don't look at it for other reasons. For us, this whole ESG concept is all about trying to get through this permit and approvals process, all right? So because of that, we've got renewable energy on site, we've got 2 solar systems, we've got wind turbines, we've got battery backups, we're using what we call AWTS systems, which basically mean that we're recycling our wastewater, we're using rainwater for drilling, and pit water for drilling. We're doing a lot of things here to show that we can develop this asset sustainably, all right? And, it's also important to know that, because of that, we actually are one of only 3 listed companies today that's certified carbon neutral, all right, under the rigorous Australian government-backed carbon neutral climate active certification. So we are doing things differently. We are best in class in terms of our environmental credentials. Okay, but as I said, we've delivered a fantastic result here with this PFS, but there is a lot more growth to come, okay? And that's a really key point of this presentation. There are a lot of other deposits here that we want to incorporate, okay? This is a VMS deposit. We know they cluster, we know there's going to be more of them, and we already have 3 of these that aren't subject to that normal exploration risk. And that basically tells you that these will come into the mine plan, these economics will continue to grow, and we will deliver more value for shareholders throughout the course of the year, okay? Sulphide City and Scorpion are at our Develin Creek project. They're higher grade, so they're higher grade than our Mt Chalmers deposit. There's a lot of upside here. We've about to start our maiden drilling program there shortly. We have an initial 10,000 metre drilling program. We're going to bring these 2 assets into the mine plan. We're going to grow these economics and hopefully really improve the grade there as well. And also at Woodshaft, which is only 800 metres away from our Mt Chalmers asset. Again, this is, we think, got a lot more scale potential. It's currently in the inferred category. We'll go and infill drill it. We'll do some extensional drilling this year, and we'll show that this will also fall into the mine plan and really goose the economics. We do have a lot of discovery potential here as well. We've got a very large package. Okay, it's a bit over 600 square k's. This is a belt scale district. There are multiple known deposits. I mentioned, we've already got 4 that are, in some sort of, JORC category, okay, that are already drilled and modelled, but there are others here as well that we haven't even got to yet. So, And to give you a sense of the opportunity here, I should mention that we flew a very large helicopter-borne EM survey over this whole package, start of last year, and it threw up about 40 different EM targets, okay? Now, EM's really good for finding these high-grade VMS deposits, all right? So we have exploration upside here in spades, and I really mean that, all right? So, as I say, we own our own rig. We've got a very large exploration program planned for this year, so there'll be lots of news flow on the way, and we're going to continue to grow this rapidly. Now, here's a little something different, all right? So, many of you will know I sort of worked in the capital markets a long time and ran a resources fund for 5 or 6 years, and so I'm really deep into the numbers, and I love diving into this. And obviously, as part of doing the PFS on the Mt Chalmers deposit, I learnt that there is a lot of value that you lose, in just delivering what they call concentrates to traders and things. Okay. So what we've started to think about on the back of that is how do we really maximise the return for our shareholders, and how do we really squeeze the rag, so to speak, and make sure our shareholders get more of that value. Okay, and to give you a sense, there's about $250 million that is in revenues, so it's not discounted, but in revenues that goes to transport costs, to metal payabilities to traders, to treatment and refining charges, or even to lost. There is some reductions in royalties that you can get with the state government if you continue to process more metals, in the state of Queensland. And so $250 million bucks. If you know me, I just don't sleep well with those sort of numbers. So we are. I won't say too much about this, but obviously we're talking about some updated strategies here. We are looking at how we can really squeeze that rag and maximise value for our shareholders, and it may mean building some additional infrastructure on site so that we can capture more of those, get these concentrates down to closer to refined metals, and really retain more value for our shareholders. So a little bit more to do on that space, but certainly an exciting bit of upside or potential upside for our shareholders. All right, so look, I'm gonna hit the elephant in the room now, and obviously we are a team that have delivered, and I think that no one's ever come up to me and said, Sparke, you're not out there drilling, you're not growing the resource, and you're not taking this down the development path. So we are a team that is moving, but let's be really candid and look at that bottom line graph there, and it has been a really difficult time for everything pre-production in copper. Okay, as you've probably seen, it's been tough for gold as well. We IPO'd at 30 cents. We're now at 6 cents. Okay, 6 cents. All right, and that's on the back of all that work that we've delivered. All right, we are a 14 million market cap business, and we are one of the next genuine Australian copper and gold producers. And I really believe these assets have that sort of potential. Okay, we've invested over $30 million in this business in the last 3 years, and we're at 14 million market cap. Think about that, okay? And the way that we typically look at these, how we value these assets, post a PFS, and I notice there's many analysts sort of walking around the conference today. You typically look at about 20% of your what they call your net present value, per share, to look at where you should be roughly trading, give or take, at any given time. So 20% of our NPV today is 34 cents. All right, so that's almost a 600% upside for potential shareholders. So this is the elephant in the room. I'm happy to have the tough chat. It has been a tough period, but believe me, there is deep underlying value in this junior copper end. Okay, particularly the developers, and we think we've really got something exciting here that's going to generate some really strong outsized returns for our shareholders as we take this down that development path. So look, thanks very much for everyone who's called past the booth, and I'd encourage you to come and say hello. Yeah, my name's Andrew. They call me the baby-faced chairman of the business. Come and say g'day. Our booth's just around the corner in the main room there. Really appreciate everyone's time, and yeah, good luck with your investments.